Boom. Huh? Who do you think you're dealing with? Joy Bananas. I keep asking you guys this. I'm genuinely asking you. Who do you think you're fucking dealing with? Joey Bananas? Just answer the question. Who do you think you're fucking dealing with? It's not Joey Bananas, I'll tell you that right now. You might think it's Joey Bananas, but it's not fucking Joey Bananas. You're dealing with the ultimate fucking market professional. You're dealing with the man, the myth, the legend. He's about to come and give you this juice, this alpha. No fat. No excess. No bullshit. No, I don't know. No. The real juice, straight to the point, teaching points, actually understanding where the market's going, macroeconomic data, everything. We're going to get into it. We're going to make some money. We're going to go ahead and continue to build and develop the network. Gentlemen, very interesting time in the markets, right? This is when the markets are the most mentally draining because, listen, think what you want about when prices are pumping. Think what you want about whenever prices are dumping. Volatility at least creates opportunities to make money. So if you understand how to short the market, you understand how to make money on the way down. If you know how to long the market, which is pretty much what everybody does, anybody that's a normie, anybody can make money whenever the price goes up. The issue mentally for people is when the market doesn't provide any kind of volatility. If there's no volatility, then there's not necessarily ways to make money because you can't short, you can't long. It's just sideways price action. Okay, unless you're on the very, very low time frames and you're trying to fucking scalp, not worth it because you're not going to be profitable doing that on a long enough time frame. So what's going on right now? Right now, we're going through a period of volatility starting to come down and the market trying to relax and digest these months of downside that we've experienced from the S&P on that 10% pullback, which inevitably brought Bitcoin down and annihilated altcoins down 80%. So we got to look at this and say, what's the question that we're trying to answer? Well, the question that we're trying to answer is, does Bitcoin, does Ethereum, does XRP, Solana, all these major crypto assets, do they rally and do we make new all-time highs? Do we double top like we did in 2021, which I'm going to show you an example of how we look very similar right there from 2021 cycle? Or have we entered the bear market? And we're going to go into a recession, multi-year recession. Those are basically the three scenarios. We either make all-time highs, new all-time highs, we create a double top like last cycle, or it's just down only. Okay? Now, I have a lot of data, things that we're about to jump into here in a couple of seconds, that suggest that most certainly we're not going into a bear market. It just wouldn't make sense. Do we make new all-time highs? Okay. This, to me, is the more important question. Do we make new all-time highs on Bitcoin and on altcoins, or do we double top like we did in 2021 and we just basically just run it back up to the highs and then we got G'd at the top? Okay, that's the more important question for me to ask. Recession, I don't see it. Okay, so let's jump into what we're saying. We got an FOMC meeting on Wednesday. Okay, FOMC is certainly the most important meeting in terms of macroeconomics for the U.S. And then we also have a Bank of Japan meeting happening on the 18th and 19th, so tomorrow as well, and Wednesday. Bank of Japan matters because if Bank of Japan raises interest rates, hikes them, which it looks like they may do at some point this year, that could cause some market volatility because Japan's their currency is pretty decimated. It's inflated, so they got to start doing hikes. So we got to keep track of what's going on with the Bank of Japan. Why? Bank of Japan is what caused the nuke on August 5th from last year. So when we got that huge capitulation in risk assets and we nuked on August 5th, that was because of what the Bank of Japan had done. And it was just speculative. It was just them talking about hiking rates and the fucking market nuked just because they weren't expecting it, right? And the reason these macroeconomic events create volatility, just so you guys understand, is when there's uncertainty. If there's a certainty of an event, people are positioned correctly. Therefore, if what is expected to happen happens, it's already priced in, they don't have to unwind their positioning. What happened on August 5th last year was Japan had done something that was unexpected, that insinuated something was broken in their economy. Therefore, boom, market nukes because they weren't prepared for it. They weren't positioned for it properly. But if they're positioned for it and they're pricing it in beforehand and then you get the result, then you don't see that volatility to the downside. Okay, just so you understand how these things are working. So it's not that necessarily the interest rate hike will affect the price of all these risk assets directly. It's just the fact that if they're not positioned for it correctly, they're going to unwind those positions. They're going to reposition to factor that in, to price that into the markets. Okay, so let's jump into this. Let's look at, we got to focus on FOMC. FOMC is on Wednesday. So let's take a look at this website. I showed you guys this chart last week, but I want to go through it one more time and show you a couple of different things I'm looking at. So let me do a little Mr. Producer. We got all them hoes. Hold on. Let's see if Mr. Logan Bauer is going to be on the stream today. No. Okay, so not today. Don't worry, guys. I know you've been asking, where's Logan at? Where's Logan? He's coming back. I just texted him. He said him and AOC are just still really working hard to try to avoid her getting convicted on helping illegals avoid ICE. Logan's just super, you know, he loves AOC, and they're really close. He worked very closely with her during the 2024 campaign with Kamala. So he's just trying to help make sure that she doesn't get into any kind of trouble with that whole situation. Okay, so we're going to let him handle that. Him and AOC got to hold it down. But until then, until she can beat that case, it's just going to be us. All right? So let's do a screen capture. Let's do a little bit of Mr. Producer. Can you see this shit? Hold on. Let's see. You should be able to see this. Why the fuck is it not doing it? Interesting. Okay. Well, you should be able to see it now. All right, gentlemen. Let's take a look at this FOMC watch tool. You should bookmark this, keep track of it, understand what's going on here for macro data. So here's the target rate probabilities for the 19th of March, 2025. Okay, so we got a 99% chance that we're going to stay between 4.25 and 4.5 basis points on interest rates. Okay, why is this important? It's like I was telling you before, we want certainty in what's going to happen. Okay, so right now it's priced in that 99%. This is going to be the interest rate on Wednesday. So we're not expecting a cut, right? We're not expecting a cut on Wednesday. So if this is the probability, then we would not want to cut. If we do get a cut and 99% is the, what's it called? The probability of what's happening, that's when you're going to see volatility because they weren't pricing that in. Does that make sense? Because, yeah, interest rate cuts are bullish for risk assets, but the context in which a cut would happen on Wednesday, being that they're assuming it's not going to happen, it's going to create a lot of panic, a lot of anxiety. What happened? I thought it was going to be the same, and then we got a cut. It'll start to create uncertainty, right? But markets enjoy certainty. So 99%, it stays the same. Cool. So that's what it is for this March 19th date, okay? So this is March 19th. It's going to happen on Wednesday. We'll find out what's going on with that. 1% chance that we get a cut down to a 0.25 basis point cut. So we go to the next meeting, which is on May 7th, okay? So look at what's starting to happen on these probabilities. Now you have a 20% chance that it's going to be a rate cut and 80% chance that it stays the same again. Well, here's what I'm expecting to happen. This, as we get closer to the May FOMC date, I'm expecting this number to go up higher, okay? I'm expecting that this 20% is going to start to move up. And I'm actually going to go out and venture to say that this is going to end up being a cut in May, okay? Why? Inflation is coming in fantastically. So inflation, we had a cool print, came in lower than expected, okay? Economy's doing well. Jobless claims is fine. Nothing seems to be broken. Trump seems to be getting the prices of things down, right? So that's going to put them in a position where they can start to cut the rates. Now, why does Trump want interest rate cuts as well? Because better for economy, better for small businesses, right? But also, Trump is in a position where he's going to have to refinance the U.S. debt as well, okay? And being that he has to refinance the U.S. national debt, he's going to want to be able to refinance it at a lower interest rate, okay? So that's why they want to get that's why they want to get these rates down. That's why he's pressuring Jerome to get these rates down. He wants them lower, He wants the economy to be booming. He wants people to be able to borrow money at a lower rate. So I'm expecting this to start moving up, and that's going to be bullish for risk assets. And then if you take a look at June, now you have a 58% chance that we're going to have a cut. So essentially, right now what these charts are telling us is that between May 7th meeting and the June 18th meeting for FOMC, we're going to have at least one rate cut, at least one, okay? At the beginning of the year, they were pricing in 2, okay? I'm expecting at least 3, all right? Especially with Pompino putting pressure on Jeromsky. So you come down here, then you start to see 30% that we're even lower, right? So this would 30% chance that we're having 2 rate cuts by July 30th. Look, by the time we get to September, the 17th meeting, there's a 40% chance that we had 2 rate cuts. So they're expecting to continue to cut rates this year, okay? Which macro is what we're looking at for a bullish environment. I mean, you get down to December 10th, there's a 30% chance that we're at 3.5. So what that would be, so it'd be 1 cut, 2 cut, 3 cuts. So that would be 3 cuts. That's where I'm expecting us to be by the end of the year, is at least 3 rate cuts, okay? So 3 rate cuts would be huge, bullish for our assets. So if you take a look at this and we compare probabilities, we go to the probabilities chart. And this is essentially that data in one table. So here we are, again, for this meeting on Wednesday, 99% chance that we get no cut. Next meeting, 20% chance that we get a cut. So this is what I was telling you. This 20%, I expect this to start jumping up as we get closer to May, okay? Economy continues to do well. Inflation continues to come down. Pompino is putting pressure on Jeromsky to go ahead and get this shit down. Hey, get these interest rates down. I got to get the fucking U.S. national debt, $36 trillion refinanced. I need a better rate on that motherfucker. Get me down to 4%. Get me down to 3.7%. And those 0.25 basis points matter on $36 trillion because that's the difference between hundreds of billions of dollars, right? Just by 0.25 basis points. So that's why he's trying to put pressure on Jerome to get these rates lower, okay? So on top of that, and we're going to talk about this as well, new trim. Everybody's saying the fresh cut new trim. No, I just didn't fucking, fluff up my hair today. Let me see. Can I see? What do I look like? Yeah, fucking fresh. That's why the honeys are fucking blowing my phone up right now. I was wondering why the honeys were a little bit more active than usual. Yeah, it's because of the hair. I figured. Okay. Well, ladies, I'm busy right now, so kick rocks. Okay. So what's going to happen on top of this? And we're going to jump into this next, and then we'll get into charts. I'm trying to educate you guys macro, what's actually happening in markets so that we can understand what's going to happen to our small caps. Because it's all contingent upon larger macroeconomic data. So as these interest rates continue to come down, if there's still downward pressure on the S&P, on equity markets, as there has been on this 10-11% drawdown that we've had recently, it's going to put the Fed in a position where they're going to have to end QT, which is quantitative tightening. So, as we have discussed before on the stream, quantitative tightening is siphoning out $55 billion of liquidity out of markets from the Fed because they're quantitative tightening. They're pulling out capital. They're pulling out liquidity, right? Selling their assets off. That is sell pressure on markets. It's a lot of money per month, all right? Once the Fed decides to end QT and they start dropping these interest rates, we're going to be in an incredibly bullish environment because, number one, even if they don't do QE, which is pumping liquidity back into the markets, even if they don't do that, even if they just end the QT, that's $55 billion net positive for upside. That liquidity stays in the markets. Okay, beautiful. On top of that, lower interest rates, easier money to borrow. Low caps do better. Low cap stocks do better. IWM starts pumping. What happens when IWM pumps? ETH, altcoins pump. That's alt season. Okay, good. You're making the connections. So I'm expecting these interest rate percentages to go up. Now, we get off of, so that's what's going to happen on Wednesday. We're going to look for no cut on Wednesday, but I'm expecting next meeting, May 7th. I bet you, even though it's a 20% chance, I'm going to say this is probably going to be a cut. Okay, Pompino is going to apply some pressure to Jerome. Jerome thinks he's run this bitch. Jerome don't run this bitch. Pompino does. So just want to double check. Is that everything I want to look at on interest rates? So let's keep that in mind. Right now we're at 4.25, 4.5%. All right. So let me think. Okay, here's the other thing I want to look at too. So here's the Bank of Japan. So they're doing their meeting on the same day as well. Inflation risks may stir Bank of Japan discussion of rate hike in May. Okay, in May. So this is also confluent with this meeting as well. So I'm expecting if they do a rate hike, because they're at 0.5% right now, they're looking to go up to 0.75%. If they go up, I'm expecting the Fed to drop here. Okay, or do a rate cut. So inflation risks may stir Bank of Japan discussion of rate hike in May. Okay, like I was saying earlier, Japan's having issues with inflation. That's why they've been rate hiking. Okay, so the reason they raise interest rates when there's inflation is because borrowing money is inherently inflationary, because it's going to put more money into the financial system. And as you guys know at this point, debt is fake money. It's just fake money that banks create. They can take your $1,000 and loan it out 7 times or loan it out 9 times, right? They can literally take your $1,000 and loan it out 9 different times to other people. So they create $9,000 out of $1,000. It's fake money. Cool. So when they have to fix inflation, they hike interest rates to prevent people from borrowing so much money to cool down inflation. Okay. The reason we've been rate hiking so much over the last couple of years is because of COVID. COVID hits, monetary supply, global monetary supply increased by 40%. Overall, on average, your money decreased by 40% in value. Disgusting. Okay. That's also why we got such an insane bull market in 2021. So now, ever since COVID, they've been having to hike interest rates because they got to slow down this inflation. People got to stop borrowing so much money. So we take a look at Japan. Inflationary pressure from wage gains and prolonged rises in food costs could prompt the Bank of Japan board members to discuss another interest rate hike as soon as in May, said 3 sources familiar with its thinking. Whether the Bank of Japan actually hikes rates at the April 30th, May 1st meeting or holds until later this year will depend not just on the price outlook, but how U.S. President Donald Trump's policies affect financial markets. The sources said on condition of anonymity, as they were not authorized to speak publicly. Okay, let's look at this one more line. So the Bank of Japan is widely expected to keep policy steady at the March 18th, 19th meeting, which is this Wednesday, okay, having just raised interest rates to 0.5% from 0.25% at their previous January meeting, with markets largely tipping the next hike in the third quarter. Okay, it's not as if we would hike rates at every meeting. Bank of Japan Deputy Governor told reporters on Wednesday, essentially ruling out a hike at this month's meeting. Okay, so that's good. We don't want Bank of Japan to hike. Essentially, that's going to be bearish. Okay, they're not going to hike at this meeting. Good. Let's get them to wait till later this year. If we can get them to wait past May, even better. Give us a chance to recover in markets. Give a chance to start pumping before we see anything like this happening. They hiked in January. Obviously, you saw markets coming down in January. So now, is it the overall number one factor as to why the markets would pump or dump? Of course not. Number one, the most correlation is going to be due to the U.S. economic policy. Okay, but there is an effect. Japan's a large economy. Japan has a lot of money. Okay, fine. So it'll affect it to a degree. But that's just so you guys understand that all this is global. Okay, this is global macroeconomics that's taking place that affects these markets. So the better educated that you are on macro, the better educated you can be on your decision making, as opposed to being one of these guys on, there are so many people on X, on YouTube, everywhere. They're going to sell you complete bullshit. They don't know what they're talking about. They're just going to sell you on a dream, on a meme coin, this, that, and the third, pump and dump on you. There's no data. There's no analytics. There's no correlation to anything else. So you're just gambling. You're literally just gambling on coins or gambling on stocks. I'm teaching you literally how to think and process information in a way where you can be effective on a long enough time frame to build generational wealth. This is not about 1 year. It's not about 6 months, 3 months. My coins are down in the last couple of months. Yeah. We're not working on a monthly time frame. We're working on a yearly time frame. That's how you make generational wealth. So I'm teaching you how to think about these things on a macro basis. So, all right, that's what's going on with this weekend on FOMC. So keep track of that. Okay, so now let's jump into the actual charts. All right. So here's what I was talking about with Bitcoin that could be interesting here, because all the macro data is telling me we're going to get a reversal. We're not going into a recession. There's nothing that suggests that. People who are calling for recession, calling for bear market, I don't agree, because there's no data for it. Where's the data? I'm showing you the data. We're getting into more and more favorable conditions than what we were even in a year or two ago. So why would it make sense for us to go into a bear market now with even more favorable conditions? It doesn't make sense. We're just getting a local correction. So at the very least, the way I'm looking at this is we're getting at the least this. Move again. So we got now this is going to be more of a pronounced drawback because it was 4 or 5 years ago, a less stable asset, so there's more downside. But you saw Bitcoin have its first top in April of 21, and then in May and June is when altcoins really ripped fucking face. You drew all the way down 55%, had this major mid bull run correction, and then you ran that bitch all the way back to a new all-time high in November. Okay. So in my mind, worst case scenario, that's the type of move we're going to get over here. Now, the downside is already taking place over here on Bitcoin. Okay. So either we've already made a low here with that 30% pullback. I mean, genuinely, I just don't see it coming back down lower than that. Maybe it sweeps that low, takes that liquidity barely, and then comes back up. But that's essentially the bulk of your move. Now, why would it be less pronounced of a drawdown than this one? Well, because we have ETFs now. We have major players in the sense that there's a lot more liquidity. There's a lot more eyes on Bitcoin. More people are accumulating it, etc. The downside is going to be more muted. So it's a 30% drawdown instead of 55%. So worst case scenario, I'm looking at this and I'm saying, okay, well, nothing macro tells me that we're doing a recession. So I'm looking for a move like this, at least, or something like this, a little bit higher maybe, right? Where you get a double top. It's possible. Maybe we just get another double top. That's what happened last cycle. Well, if we get a double top, that means all of your assets are going to at least run back to all-time highs as long as they were assets that have correlations to majors. This is why it's so important that whenever you're accumulating some of these, altcoins, for example, meme coins, the reason we trade the boys club, Pepe, Brett, Andy, Wolf, is because they're correlated to a major. So that whenever you get these major drawbacks, you know with confidence that they're going to come back with some fucking intensity, with some upside, because they're correlated to Ethereum. So when Ethereum moves back up, they'll move back up. The issue with all these other shit coins that are based off of attention, if they're not correlated to majors, once they're down 80%, 90%, they're never coming back because the attention's gone. They have no correlation to a major asset. That's why the boys club is so good, because it is correlated to Ethereum. So if Bitcoin and Ethereum start pumping again back to all-time highs, guess what? Those assets go back to all-time highs too. Right now is your generational bid, your generational entry. So worst case, I'm saying, all right, well, we get a double top then. Do I think we get the double top? No, I think we go higher. And I'll show you a couple of points as to why I believe we go to new all-time highs. But that, to me, is worst case scenario, is we just run it back for a double top, and then it's over, okay? So that's that. So you can see that pretty clearly. I mean, look, if you just look at the chart, it looks pretty similar. I want to move this because I know I'm in the fucking way. Okay. I mean, that looks pretty similar to me, right? I'll move that out of the way, right? So you get this big move up, got this big move up, went sideways for a little bit, went sideways for a little bit, drew down, did our double top. So it would look something like this, right? So you go sideways for a couple of weeks, all right? Come up a little bit, and then like that, right? There you go. That's your move, right? So that's your double top scenario, okay? Do I believe we double top? Not necessarily. I think we go to new all-time highs. So locally, You know what? Let's not even look locally on Bitcoin. You guys get the point. We're talking back row today, okay? Okay. Let me look at... Here's another reason why Jerome is going to be incentivized to bring down interest rates. Here is US 10-year yield on bonds, okay? So what was interesting is we had this pumping ever since the bear market in during COVID, right? So here's your COVID drop right here, March 2020, and then we've been moving up only ever since then, okay? Keep in mind, if government yields on bonds are moving up, it is bearish for markets because it incentivizes people to take the guaranteed interest rate on their bonds and get paid out in US dollars, okay? So finally, it looks like we topped and now we're trying to break down, okay? So you got your... You could call this thing right here your shoulder, however you want to look at it. But to a degree, you could say this is a head and shoulders, right? So here's your shoulder, here's your head, here's your shoulder. Okay, so this is going to start to do this. When these bond yields start dumping, okay, it's another reason why Jerome is going to have to lower interest rates so that the yields are better on the bonds, okay? So we had drawn this out. This is your demand locally on these bonds. We got to break down through this demand zone right here, take this liquidity here, maybe we bounce back up into the demand and turn it into supply overhead, and then come back down to this demand zone. Once we get back down to this demand zone and you see it start to break down from here, this thing's going to start nuking, okay? This thing's going to start nuking because there's not much holding us from dropping back down lower, okay? As the yields come down, there goes our altcoins, our risk assets, because people are going to rotate their capital back into risk assets. Now, let's take a look at... Oh, here we go. I'm going to show you BTC... No. All right, let's do this. Now I'm going to show you our other indicator for whether or not a cycle is topped on Bitcoin. So we've talked about this in the past as well, okay? So here's the Bitcoin Nvidia pair, all right? So Bitcoin divided by Nvidia, let me put it in text over here. Okay, so this is Bitcoin divided by Nvidia. So this chart, anytime this chart is pumping, Bitcoin is outperforming Nvidia. Whenever this chart is dumping, Nvidia is outperforming Bitcoin. Okay, now why are we using this as a cycle indicator? Well, it's a barometer for risk assets. So Nvidia is the premier stock right now. It's the premier equity asset. So largest market cap of all companies. Cool. So if Bitcoin starts outperforming Nvidia, what does that say about the market as a whole? You got to think about how this works in the market. Well, if Nvidia is now getting outperformed by Bitcoin, that tells you you're at the tail end of a cycle because now everybody is rotating their profits from these major caps and rotating them down into smaller caps, rotating them down further down the risk curve. Interesting. Well, once you see people make that rotation further down the risk curve, that's whenever you see things start to fly, like crypto, and when you want to start exiting the market. So let me put below Bitcoin. Okay. Put this in log. And look at how this times tops. So on top, when we pump, look at that. Look at this. Look at how perfectly this is correlated. Okay. When Bitcoin greatly outperforms Nvidia in a cycle, that calls the top on Bitcoin perfectly on these blow off tops, right? You can even do this one too. It's literally calling the Pico tops, right? So Bitcoin Nvidia, blow off top. There's your top on Bitcoin in December of 17. Exact top, literally the exact top. Get this blow off top here in the middle of 19. That's your local high on Bitcoin. Blow off top in March of 21. Guess what? There's your high in March of 21 on Bitcoin. And then your second top on Bitcoin happened right around this pump right here on Nvidia. And then ever since then, we've been bleeding. Okay. So you're back in something like this. These bleeds. Okay. Well, in every cycle, you've had this. What do you think is going to happen here? That's another point of confluence I have where the cycle to me doesn't look topped. It doesn't look like it's over because these major oscillators, these indicators that show when cycles are topping and whenever that rotation has happened further down the risk curve, they haven't gone off yet, right? Those rotations haven't occurred at a high degree yet. So this whole time while Bitcoin has been bleeding against Nvidia, meaning that Nvidia has been outperforming Bitcoin this entire cycle, that tells me that the rotation of major assets of capital further down the risk curve has not taken place yet. There is clearly not a blow off top on this yet. Let me change this to Bomba Cloud. Candles. Bitcoin has been moving up ever since the bear market. It has moved up 6.5x from the lows. Yeah, literally a fucking 7x from the lows, while this entire chart has bled. Okay. Bitcoin has gone up in a 7x. So when you see this chart start to pump over here and you get this blow off top, to me, that signifies, okay, we got the top on Bitcoin. Cycle's over. Because the rotation has now happened into further riskier assets. We haven't had that rotation yet. You can also see that on the IWM. IWM did not break out to new all-time highs this cycle yet. Therefore, that rotation further down the risk curve has not fully taken place. So if Bitcoin can pull a 7x from the lows while bleeding against Nvidia, what do you think is going to happen when you finally see the cycle top and you had that full rotation into risk assets? That's why I still see this cycle as breaking to new all-time highs. I do. Ethereum, same idea. Still has not broken to new all-time highs this cycle. Why? Well, because IWM got stuffed at all-time highs, previous all-time highs. When IWM goes into new all-time highs, you're going to see Ethereum pump. So I have all these indicators to me that tell me, I don't see it yet. It's not done. But mentally, what's going to happen is people are so exhausted from trying to get rich quick, and instead of developing themselves outside of crypto, building incomes outside of crypto, being a part of a network organization that can keep them mentally stable throughout these market corrections, they're going to get this next little move up on Bitcoin when it finally happens, like right here, back to all-time highs, and they're going to jeet their entire bags. You know what's going to happen? They're going to jeet their entire bags because they just want to be done so bad. They want to get out of the market. They want to be done. They want to get their money. They're going to miss this move. And they're going to get fucked. Because mentally, they could not handle the time it took to make all that money. Well, if you're expecting crypto to be your income, you're not looking at it the right way, right? You're not developed outside of this space and using it as an avenue to create wealth for yourself. You're using this as a way to make money and pay your bills. Yeah, mentally that's going to be draining. Yeah, mentally that's going to suck, because if you're expecting crypto to pay your bills and then your portfolio goes down 50%, yeah, you're going to be a little bit fucking pissed off. Yeah, you're going to be a little bit mentally fucked up. But that's your fault. This is not an income. This is not money that you're pulling out to pay your fucking rent. No, you should be making money in the real world with a business, with an e-com store, in sales, whatever it is that you do, boosting up your income, and then taking all that excess capital and you rotate that into things like crypto to build wealth off of that. That's what you do. That's how you stay mentally stable like myself, because I'm making money regardless. If this price is going up or down, I'm still making money. That's what we teach inside the Taylor's Code is, listen, this should not be your income. This is supposed to be your wealth generation avenue. Okay? So that, again, to me, I see no reason to call a cycle top with something like that. Okay? Gentlemen, any questions, comments, concerns, charts you guys want to look at before I start rotating out of the macro data? We can start looking at some individual charts. So that was the Bitcoin Nvidia pair. I want to revisit that with you guys. So that clearly has not pumped yet. I mean, I don't see a blow off top here. So let's go back to Bitcoin. All right, I'll let you guys take a second to throw in some chart requests. We can look at XRP too, because I know that's in the title. So we want to make sure we look at XRP. While you guys are throwing in those suggestions, let's look at Bitcoin on a lower time frame. Okay. Chart requests. All right, let's look at Bitcoin on a lower time frame. Do like on the 6 hour. All right, let's see here. Trend line, Fibby. Here we go. Let's get the fibs on there. Yep, there's that liquidity. Okay, we should be good there. Long-term wealth, exactly. Okay, so here's Bitcoin on a lower time frame, and then we'll jump into XRP. And I know Caspa was one that guys were liking to look at. So I had this drawn out way over here, clearly, this line, and it's playing out to a degree right now. So what you saw happen on Bitcoin is we came back down and we tested this demand zone. Okay, this is exactly where we wanted to see a reaction, and guess what it did? It tagged our demand beautifully, came right into it, and popped right back up. That's what you want to see. You want to see a quick buyback once we hit demand. Can we take a look at XRP chart? Yeah, we'll hit XRP next for sure. So what I did was I created this little fib range right here. Okay, well, this little range, right? And we were trading right above it. We finally break down through it and we nuked all the way down. Cool. So what you saw happening on Bitcoin here recently that is giving me some promising looks for the short term is we're clearly creating an uptrend here. So this is the first reversal on a low time frame of a clear uptrend. So clearly we had our low, higher high, higher low, higher high. Look, and then I drew this down for a higher low. Look where we came down right here. And look, now we're starting to try to move back up. That would be the next higher low. So then if we come back up a here and we either break through this or we just reject locally on this 0.5 of the mid-range, that's a higher high. If we can continue that trend and move back up, now we've got an uptrend again. Okay, so that's what we're looking for on a lower time frame on Bitcoin. Now, is that exactly how it's going to play out? Maybe it takes another week, 2 weeks before we start to get that uptrend again. Potentially, we'll see. But that's what I'm seeing right now. It is a reversal, very locally, very low time frame. You're seeing it start to reverse back up, and so we still have the major indicators here for what would be our reversal, like what we would like to see is going to be something like this. So we want to see boom, boom, boom. So the levels, so we took this liquidity, right? So we had this built out before. So we had liquidity here. We came, we grabbed it. Good. We're starting to reverse the trend. This was the previous range that we were trading within. Okay, up in here. We got to see a reclaim of this range to start getting bulled up to the tits again. If we can reclaim this range and actually hold it, because here we tried, rejected. Here we tried again, rejected. Okay, We got to reclaim this range. Then we have to reclaim the yearly open, February monthly open, and then we're pumping to new all-time highs, which I do expect. I do see that happening. My personal opinion. If we also draw out the volume, fixed volume range. Where is it at? We could even do it from all the way over here. Okay. Our naked point of control is now right at 96.4. So this is going to be a major level to flip as well, because you can see clearly the most volume took place right in here with all this price action. Okay. So the most transacting was happening right in this area. You can see it clearly right here, all this transacting. Okay. Counter buying and selling. Once you flip this NPOC, we're looking fucking beautiful, because now the buyers are back in control. Sellers have been exhausted. We start moving back up higher. Okay. So that's where we'll leave that at. But yeah, we need to see a reclaim of this range up here. So let me move this out a little bit. Move it over here. Okay. And this is where we got to reclaim up in here. 90, so what is that? 89.2. Reclaim that. Start getting back into this range, and then we really get this 2025 yearly open. That's when I'm bulled up to the tits. That's okay. Yeah, we're cooking now. Okay. All right, gentlemen. ETH very close to either this is either bottom or we come back down, get a couple stabs lower, boom, we're up. ETH, I just don't see any more major downside. All right, let's look at XRP. XRP right here. Okay. So let's get on a higher time frame. Clearly I had some drawings out on here. Look at it like this. Okay. Look at that. Beautiful bounce off the bottom of the range and came back up. XRP is showing a ridiculous amount of strength. Okay. That is very encouraging. So let me get this out of here. So what do we have drawn here from last time? Okay. So from last time, I had a draw come back down to the bottom of the range, which we did here. Bounced, which we got this bounce right here. And then I drew it to come fill this FVG, which is right here. So we have a fair value gap right here that may come and get filled. And this was our next major demand zone. Okay. So basically what I thought was going to happen was bounce, get a bounce from the bottom of the range, except this bounce kind of happened more like this, right? But it came true. So we came down, we tested the bottom of the range, which was right here. Whoops. Right? There it was. You get your bounce back up, and then you're probably going to get this move back down. So what I'm expecting here was to get this FVG filled, which is certainly possible. Well, likely actually. So you fill this FVG from right over here. You bounce back up. Maybe you just reclaim the range, or you do this and you start moving back up higher. But the strength on XRP is incredibly encouraging, which makes sense. Why? Because Trump is going to he's going to push for American-based cryptos. So XRP advantages is it's American-based. So the CEO, the owner of Ripple, is going to go ahead and is a good relationship with Trump. So probably going to pump. SEC case on XRP getting closed. So all the litigation against SEC is going to get dropped. It's American-based crypto. So what are they going to try to do? They're going to try to make it tax-free. So one of the big things that Trump has been talking about is making all American-based cryptocurrency have zero capital gains tax. Gigantic, massive advantage. So now XRP, Solana, Caspa, which a gentleman in the comment section of one of my videos had actually pointed out to me, which was good. I appreciate him doing that. Caspa, American-based, all these assets are going to benefit from zero capital gains tax. Well, inevitably, naturally, that's going to get accounted for in people's investment strategy, where if they say, well, maybe Bitcoin, maybe Ethereum outperforms XRP over a 4-year time span. But if I'm paying 30% capital gains, 10% capital gains tax on that move, if I just put that money into XRP, maybe XRP does a little bit less in terms of multiples. But if I'm not paying capital gains tax on XRP, do I still net profit more? And if they do, well, guess what they're going to buy? They're going to buy XRP, which inevitably is going to turn into a cascade event where not only did you invest into it because you believed it would do less multiples but make you more profit, but then as everybody figures that out, then it's just going to end up doing more multiples, right? Because people are just going to buy it. So I'm incredibly bullish on XRP. Now, here's the thing. To me, the way I look at these things is you gotta, to a degree, invest based off of capital. What kind of capital you're able to allocate to these things. So let's hide this real quick. The fuck. So the way you want to look at this is, you have to invest with considering the amount of capital you have. Okay. So XRP is such a large asset now. And this is funny because we were inside of the Taylor's Code. We're talking in the Discord about a couple of different assets, and Jonathan had brought up, is it possible that XRP goes to $10,000, I believe was the number he gave. And I laughed because you hear those targets and you see those targets on social media, and it's hilarious because those are the people who are just preying on normies, or they themselves have no idea what the fuck is going on. They're just talking about XRP. Oh, it's $2.30 right now. What if it goes to 10,000? Because the way everybody thinks is, well, Bitcoin went from $100 to 100,000, or Bitcoin went from $1,000 to 100,000. So they look at other assets like XRP on a similar unit cost basis, and they think that because XRP is $2.30 right now, it could go to $10,000 if Bitcoin went to 100,000. I understand the logic, but they don't understand how market cap works. Market cap is the dictator of multiples in the unit price. Okay, market cap is unit price multiplied by supply, available supply. FDV is price multiplied by the full actual supply. Okay, so for example, Bitcoin FDV is different than the actual market cap because Bitcoin's not fully diluted yet. There's still coins that have yet to have been mined. Okay, so my point is can XRP go to 10,000? Fuck no, because the market cap is hundreds of billions of dollars. So the point I'm getting to is, who's somebody that would want to invest into XRP? In my opinion, you got to have at least 6 figures for it to really make sense for you. Because if you don't have at least 6 figures, you can size into smaller assets and get way more multiples than you would get on XRP. For example, something like Pepe is a great example, where if you have, 50 grand that you're trying to, get a nice return on that. Me personally, I wouldn't put 50 grand into XRP because I could just size 50 grand into Pepe, which is just as safe at this point with how much downside it's experienced, and has way more upside potential. And $50,000 you can easily size into Pepe. There's plenty of liquidity. There's hundreds of millions of dollars of liquidity in Pepe. Why would you size in that 50 grand into XRP? XRP might pull a 2 or 3x still, if that. So 2 or 3x on XRP or a 10x on Pepe from here. So that's just the risk to reward I'm looking at. Unless you're sizing in with millions of dollars or hundreds of thousands of dollars and you just want to make sure you're in something that's going to preserve that money, then yeah, put it into XRP. If you got $1,000, $2,000, again, in my opinion, it just doesn't make any sense at all. Because what are you going to turn $2,000 into $4,000? It's like, okay, cool. You know what I'm saying? You might as well turn $2,000 into $20,000 with Pepe. So that's just the way you got to look at these things is market cap. What's the market cap? How many multiples can you see off of this from here? Okay, does it make sense for me to size in with this level of capital? Okay, you got $100,000? Okay, now you can start to look at XRP and say, all right, that makes sense. Less than that, I just don't see it. It just doesn't make sense to me. Why would you size in 50 G's into an asset that does 2 or 3x when you could size in 50 G's into a Pepe that'll do a 10x from here? Okay, so that's the way I'm looking at it. But the strength on XRP is beautiful. So you guys see I have this range drawn out, this fib range. locally. So I drew it locally. So from this top to this bottom, right? Which makes sense. Why does that make sense? Well, look at this. We tagged it here and rejected. And we broke through here, came up to range high, broke back down out of the range, and look what we did. We nuked. So this is a very valid range right here. Okay. So if we look at this range on XRP, it's stayed inside this range. If you get to stay inside of this range before this next move up higher, XRP is going to fucking cook. It'll cook. Now, again, like I said, 2, 3x on an asset this large is a fucking fire cook. But you get up to 1.65, you're at $4.7. So $4.70. Let's see what the size of that move is from here. So 2x, there you go. That's what I was saying. 2x, 3x is basically what you could see on XRP. And then if you go up to the 2.618, 3.5x. So, I mean, that's literally what I just said. For me, that's best case scenario on XRP is you're getting this. That's your all-time high cycle top would be this 2.618. So $8.30. If you get XRP up to $8.30, probably should start to exit your positions. Probably should start to get out of the market. Probably the top. Okay. I would definitely be taking if you're sized into XRP here, and you get this 2x up to 470. I'm taking like 50% off the table there, taking profits. Okay. Because that would be a nice move. Okay. So that's XRP. XRP looks wonderful. It does. It's very strong. Okay. I'll give XRP that. And then Solana. Let's take a look at Sol. Huh? All right. What do we do on Sol? Oh, look at that. So we front ran the demand to a degree. So we chilled out right here. So we can move it up. Yeah, look at that. So it tagged that. So like this region right here. Tagged it. Okay. So we're on the weekly. Okay, so here's Sol, right? So Solana, this looks like a nice level to hold here. Good that we held it, okay? So here's the previous cycle all-time high. I already have fibs drawn on this from a macro standpoint, and you can clearly see the range that was built. So here's your mid-range. We rejected off of the mid-range, broke through the mid-range, came all the way to the range high, rejected, came all the way back down, retested mid-range, boom, hit the range low, reaccumulate, bear market, cool. Break through the mid-range again, and we come all the way back up, and we retest all-time highs. Okay, we did not break to new all-time highs, I mean, momentarily. Okay, we come down, we reject from the all-time highs. This is why I don't believe the cycle is over. Okay, I just don't see these things not breaking out this cycle. It just doesn't really make sense to me. The only asset that actually broke out this cycle in terms of the majors is Bitcoin. Bitcoin is the only chart that clearly broke out and went to new all-time highs. Solana did not completely break out. Ethereum did not completely break out. BNB did not completely break out. Look, see? XRP did not completely break out. Look, see? None of the majors completely broke out. The only major that broke out from previous all-time highs from down here was Bitcoin. It's the only one. Okay? So, again, it just doesn't make sense that the cycle's topped. It just doesn't, unless we're going into a bear market, which I don't believe is going to happen. So, Solana, we got a nice reaction from here. Okay? So, we came into this demand. We tagged it, just similar to that liquidity right here. Could we come back down and actually sweep this liquidity? For sure. We might come grab that real quick before we move up higher and reclaim like this level. Because you saw as soon as we grabbed this liquidity and we lost it, we fucking nuked straight down. Okay. That was that local liquidity right here. Okay. So we get a reclaim of this, which is going to be $1.69 on Sol. We're cooking again. And if you want to look for a target on Sol, let's see. The 1.618 would be 2 grand. What is it at right now? Yeah, I don't see that happening. What are these based off of? Yeah, we're probably gonna have to look at this in like this. Okay. So if we draw the range like this, what's our 1.618 at? Yeah, this makes more sense. So my first target on Sol, I still see it coming up to $400 a cycle. Okay. 400 bucks on Sol. Oh, that's crazy. That's so high. Da, da, da. Trust me, it won't feel like that once you're back up in here. When you finally break out, 1.618 fibs play all the fucking time in a bull market. 1.618 is not a crazy target. From the top of the range to the bottom of the range to this reaccumulation right up here around the mid-range. Test the breakout, rejected, come back down to the mid-range. Look, see? We're come back down. We're hovering right around the mid-range. We got to get this reclaim of the mid-range. We're looking good there. Break out to new all-time highs. I'm looking for a $400 Sol. Okay? So that's Solana there for you. All right, gentlemen. Good? Anything else you guys want to look at? Oh, my goodness. Let's see. How many live viewers we got? 20 plus. Not bad. All right, gentlemen. So those are our majors. We'll look at quickly Pepe, because Pepe, of course. We all love a bit of Pepe. Okay, we'll hide everything on this. Let's look at Pepe. So Pepe is at a generational bid zone. Okay, we've been talking about this. So if we look at the monthly, I should have the drawings on here. I do not. Okay, we'll hide the fibs. Look where we're at on Pepe. We're at a major monthly demand. Okay, we can even take it from this one right here. Okay. Every time that Pepe's come into this price, and we'll even move it down to the wicks because that's closer to where it's been tapping. Okay. So every time Pepe has come into this zone, this has been a generational bid. Okay. On a monthly time frame. All right. So you come up, you have this first massive move up in March of 24. Great. That's when you ripped your 10x from here, right? So this was a 10x here. Boom. That was 11, 12x from the low. Okay, so you rip a 12x. Come back down. You retest this demand. You rip what after you retest that demand? Or you create that demand. You pull a 4x. 4x plus. Great. Come back down. Retest this demand. $4x for almost 5x. Okay. Come back down to this demand. 5x would be here. If we go back to previous all-time highs, it's a 5.5x. If we break to new all-time highs, maybe we go to, let's say, 6x. Okay. My point is when everybody's pissed, the price is down here, it looks bad, etc., that's nothing to worry about, in the sense that if you don't believe the cycle's over, this play is going to happen again. Okay. So every time we've come into this demand zone, Pepe has traded at these prices before. And guess what? When it's traded at these prices before, what has it done? It's pumped hard as shit. Okay. Well, we've done it once, twice, 3 times. Do you think the third time is not going to do a similar move? I mean, it's done it every other time that we've come into this same demand zone, the same price area. We're holding here, right? We got this nice bounce off of the demand back up into here. Well, if you ride it from here back to previous all-time highs, you're looking at least a 5x, 5.5x. New all-time highs, at least a 6x, right? So again, if you look at things macro enough, I'm looking at the Boys Club as a fucking winner because Pepe moves to new all-time highs, which I believe it does, minimum, right? As long as ETH can get back to 5,000 ETH, previous cycle all-time highs, Pepe is going to at least this 6x. Well, if Pepe does a 6x, guess what Brett does? 9x. What does Andy do? 12, 15x. What does Wolf do? 18, 20x. Easily. So this is the long-term play we're looking at because we know these are all correlated to Ethereum. I'm looking at this saying, all right, that's a winning fucking play. So don't fret on the local price action on Pepe because you know the previous 2 times we've had major pumps and we came right back into this demand region again. We've ripped up higher again, come back down, rip up higher again, all the way up here, come back down, rip up higher again. Okay? So macro is important. We go back down to the daily. Put this in log. Okay, look. See? Come back down. There's our major demand. Come back down. Boom. Come back down. Bounced again. Move up. We throw the fibs back on. These are the targets I have. So let's see if this would make sense with what I drew. Yeah, like I was just saying. 6, almost a 7x to the 1.618. Just about where I was drawing it from before, right? So I'm seeing this is my target minimum on Pepe on this next leg up. Right here. Okay. What is that? 7x, almost a 7x. All right, gentlemen. Outside of that, that's pretty much all we got. Okay. So let's see. Keep in mind, the gentlemen are keeping ourselves level-headed, understanding the macro, understanding the data, not getting too fucking greedy to the downside. If I even throw on, let's throw on this as well. If we look at the GLI as well, like we've said before, clear correlation. GLI moving back to new all-time highs, bullish. And yeah, I'm liking it, gentlemen. I'm liking it. Cool. If you're not already inside the Taylor's Code, link is in the description, gentlemen. All right. The link is in the description. Link is in the X bio. So go to my X bio if you're watching on X. Let me get back so you can see you motherfuckers. Go to live scene. Do a little Mr. Producer. Boom. All right. So if you're not already part of the Taylor's Code, link is in the description. Link is in the bio. Click on it. Fantastic. March. Only for March. Only for March. If you use code, discount code TC, TC for Taylor's Code, I know, very creative, TC 444 for whenever you enroll in the network, in the university, and you get access to the private Discord, it's going to be $40 off of your first month. So for the base plan, that's $10 to test it out, to make sure that you make more money this cycle. Oh my goodness. Think about all the dumb shit you spend $10 a month on. Think about all the subscriptions you've forgotten about that you're still paying $10 a month for. So join the network. I'm going to actually show you how to do that. Let me actually show you guys. Do this. Go here. Okay. So here's the website, thetaylorscode.com. Go to a professional gentleman. If you want access to the private crypto plays where you're actually getting access to my buys, to my sells, when we're taking profit, whenever we're hedging, etc., whenever we think the cycle's over, that's the most important, right? Get access to the gentleman's program because then you're going to get access to the private crypto plays. That's where I'm putting in all the information that we're not talking about live on YouTube, the new assets that we're going to start accumulating on this next leg up because there are going to be new opportunities. There's going to be more things that are going to present basically huge upside for the temporary next leg up. So you want to be a part of that. You want to make sure you're getting in on these things at the lows as opposed to hearing about them at the highs and being the exit liquidity for everybody else. Having a team, having a network is going to make you more money in the long run. You can't call yourself an investor if you don't see how you can make an extra $10,000, $100,000, $1 million this cycle by being a part of a competent organization that's going to help you make more money in the long run. That's the most sound investment you could ever make, right? So you click on the gentleman's program, so premium Discord plus a private crypto place where you get access to the closed off section of the Discord that has all of my personal portfolio analysis and personal portfolio plays. You come out, you click on this, and then like I said, only for this month do you get to use the discount code TC444. Okay? You apply that, give you $40 off of your first month. And that expires at the end of March. So if you're slow and you want to wait till the market starts pumping again before you get excited and before you start doing anything, fine, be my guest, but you're going to end up paying full price. Hold on, it always does that for me on the first try. There you go. There's your $40 off. Okay? March 31st, 11:59 p.m. That discount code's gone. Boom, you're paying full price. All right? Simple enough, gentlemen. All right? I look forward to see you guys inside the organization. We'll talk. We'll discuss markets. We'll discuss your portfolio. We'll teach you how to do TA. And we'll keep making money. All right? That's the goal. Make money, outlast the rest of the market participants. That's the goal. The winners in business, the winners in life, are those who win through attrition. This is a war of attrition. The man who can simply stay in the markets on a long enough time frame will win. The men who capitulate, get out of the markets, the stress was too much, the emotions were too much, they lose. They lose on a long time frame because they've lost through attrition. And why do they lose? Because they always capitulate at the lows. Nobody at the very top is like, oh, I'm done with this. I've made enough money. I'm going to get out just by off of feelings and no analysis at all. I'm just going to cheat at the top. No, that never happens. Those people round trip everything, and then they get back down to the lows. They think it's all over. They don't think it could ever happen again, and then they capitulate at the lows. That's why they lose. It's a war of attrition. Who will outlast the other market participants? Eventually, you'll win if you just stick around long enough. You just don't quit. You can't lose if you don't quit, gentlemen. Okay? Let's get the fuck out of here. Good episode today. Do a little Mr. Producer. We got all them hoes. Now I gotta go talk to all the hoes. They saw the new haircut. All of he's rich and handsome. Yes, I can do it all, sweetheart. Boom, boom.